Hello friends, thanks for joining me again. In front of you is the chart of SPL on the Australian Stock Exchange. I used to look at this chart from time to time for someone on hot copper, and I'd often say that there was no obvious sign of a driver in place. And what I mean by that is there's no obvious sign of active professionals in the market. They're the professionals who will actively support their positions in the market. There's no doubt that passive professionals were likely involved in the stock, along with the retail side of the market. But through this period here, there's very little sign, in fact, no real obvious signs of the active traders in the market, the active professionals. And that's despite there being a little period of pretty obvious accumulation here, and price did spike up out of the accumulation zone, but it never really went anywhere after that. There was no driver in the market to mark the price up. Price continued to trade on the fundamentals. The fundamentals weren't really there. They weren't strong enough at the time. So price meandered sideways in response and never really went anywhere. Just continued to trade between $1 and $1.50. This is a period of a couple of years, I think, close on 2 years. You can see it never really traded above the highs of that down bar. So down here is where price, along with the rest of the market, fell down sharply on the COVID issue, the coronavirus, when it came out in early 2020. Price moved down to the 75-cent level and slightly below for a short period and found some support. You can see volume's not particularly high, so it's not climactic or anything like that. And then in response, this must have been some sort of announcement. So let's have a look at it from there. We'll zoom in a little bit. And here you can see this is the lows from the coronavirus falls in the market. And this must have been an announcement of some sort. There's almost no doubt. Volume would be triple the average volume. The spread is very wide. The reason for the mid-bar close is more than likely people who had been trapped in over here were getting out. They'd bought between $1 and $1.50 and seen price drop to 60 cents to 75 cents. They were well underwater and probably saying to themselves, when price gets back to my level, I'm out for break even. So as soon as price spiked up like this, and this bar here, it drew out quite a bit of supply, quite a bit of selling pressure. And the close here is a good indication of where buying remains strong and where selling has come in. You've got selling in this proportion, and the buying strength remains in this proportion. Now, when you get a big up bar like this in any market, you should always look at the lows of the range. If those lows get exceeded, especially if price falls below the lows and then shows that it cannot recover, it's an unsustainable spike. It's generally a pump and dump, something like that, and you don't want to be in that market at all. So look at the lows of the range. Generally, the previous bar's close is a good point to mark. I say that because often you'll get a little gap up when the market gets an announcement before the open, and you get a little gap up. You're better off marking the previous bar's close rather than the traded range of the bar you're looking at. So you can see that price came back. I'll clear that and start again. Here's the lows. You can see the price came back the next day on moderate volume, pretty much average volume. for price to come all the way back to the lows of the range shows that there's not a serious amount of demand in the market. Certainly not, at least not yet. It was easy to get the price back. Now you will see this bar here is what I would call a buy the offer bar, remembering that this is the buying level. We're not buying above this level at the moment because selling pressure remains above. So this is buy the offer. This is a little accumulation bar, and then in response a little consolidation. So prices moved up and then consolidated back. Then another buy the offer bar. See, when price consolidates back like it did here, other people will reload the offer. Remember, you've got the bid and the offer. They'll reload the offer, and then the professionals in the market and the retailers who are clever, they come in and they buy that offer up. It's been reloaded, and then price consolidates again here in response, and the offer is reloaded, and then the offer is rebought again. And you can see how the professionals in the market and any smart retailers can continue buying at a level that they're happy with, like this in here. They've bought on this bar and these three bars we've just pointed out. Then price goes into a consolidation pattern across here. This is checking the market for supply and threatening any of the traders who have got into the market that price is not going to go anywhere and perhaps they should sell. And that's probably why you've had these three down bars that stretch lower and close near their lows and appear like price is going to break down. These are threatening down bars to worry market participants. But look at the response each time. There's an up bar in response each time. And when you see that sort of thing, it's some form of absorption. It's the market professionals showing that they're taking control, or at least attempting to take control in the market. This is their footprints. You can see what's happening. You can see buy the offer bars, then threatening down bars, which have no downside follow through. Each bar in response is higher. This is the footprints of professionals, and generally active professionals who are active in the market, supporting their positions, defending against supply and marking price up when the trading is favourable. So here's the lows of the range we were looking at. Here's the buy level. You've had price come back, and then this could only be some sort of announcement again. There's little doubt. I don't know what it was. And you've got 2 weeks in a row where it's happened, so it's possibly two actual announcements a week apart or something like that. But you can see on this second bar, if we mark the close again on this bar, supply has been drawn out, possibly profit taking from anyone who remained as a holder over here or was smart enough to do some buying at the lows down here, either down here or through this period here. There's some profit taking in there anyway. You see the next bar was up, but volume was very much lower. Not necessarily no demand, but it was very much lower. Spread was narrow. And then I'm not sure about this bar. I don't know whether there was another announcement or whether a bit of enthusiasm in the market came in that wasn't supported. But you can see that the professionals weren't supporting a markup at this stage. At the time you wouldn't have known, but if you look here, there's a little gap just here where on the following day price moved lower and then it gaps below the buying level. And it's a bit of a telltale sign that there's some in the market at least who would prefer price to come back. Now we'll clear that and start again. Now we'll mark the lows of the range again, because if that gets broken, you don't want to be in the stock anymore. Here's the lows of the previous range. So there has been some nice gains made. And when you're looking at these ranges like this, if this is the full range here, if price can consolidate above the 50% level of the range, then the market is really strong. If price comes all the way back to the lows of the range, it's nowhere near as strong. So you can almost take your rule of thumb, if price consolidates up here like this, right at the highs of the range, the market is really strong. If it consolidates through the 50% level, it's fairly strong. But if the market comes all the way back to the lows of the range and tests that, it's nowhere near as strong. And you'll often see the reflection in this as price then accelerates higher. The really strong market will accelerate higher with relative ease and probably go quite a bit higher. The average market, less so, and the weaker market will find it more difficult. You can see here in hindsight that price never really got anywhere near the lows of the range, perhaps 2/3 at the most. So it's a relatively strong market, but not exceedingly strong, you might say. But price gapped lower just here. This was another telltale sign of professional traders in the market. Gaps don't generally happen for no reason. There's generally a reason for it almost every time. So if you see a gap below an important level, then the market is probably likely to be wanting to come back and test a lower level, perhaps threaten the holders and see if they can milk out some more stock or something. And same with gaps over important levels. If there's a gap over an important level and then price accelerates higher in response, it's happened for a reason. It generally doesn't happen organically of its own accord. So price has come back, it's consolidated around the 50% level or fractionally lower. You can see price here, found a nice level through here, popped its head above. This might have been some sort of buy the offer bar, and there, and then price then goes into that consolidation again. One, perhaps two threatening down bars to see if they can flush out any weak holders, any holders who are a bit panicky and aren't sure if they want to face prices moving lower, so they sell out, and then price accelerates higher again. More than likely, it's over 2 weeks, more than likely on announcement. I'd be surprised if this wasn't an announcement. But this time, these two down bars were on much higher volume than the previous down bars. This was some actual selling pressure coming in. Now, whether it's one professional group or all the professional groups, I don't know. I know that this was increased selling pressure. Now, so far, if we mark the lows of the range, price has found support here on a small increase in volume over the previous week. So there was some support come in at the lows of the bar here, and you're at around about the 50% level of this 2-week up range. So there's no huge danger at the moment, but I would just say that there was some actual selling pressure come in. If you look back, clear it off. If you look back, when price really spiked here, in response, the market attempted to go higher, but there was no obvious sign. Well, perhaps this bar had some supply in it. I'm not sure. It's intermediate volume. You might have to go back and see if there was an announcement there and find a reason for it if you were so inclined. But there's no doubt that price successfully consolidated through here. It went through the regular consolidation pattern after possibly another buy the offer here. And you can see back over this side, there was no serious selling pressure in here. Volume was relatively low. But this time, volumes were higher. The spread or range was more serious. So demand struggled to absorb the supply that was being drawn out. I'd just be keeping an eye on that. especially if price moves back up to this level and then finds supply again and does something like that, that would signal to me that the professionals are getting out at this level. Then if price doesn't do that and instead comes up to this level, tests it for strength and accelerates away, well, everything's fine. This was just some profit taking by whoever. So just watch that level. There's no doubt the market has stabilised here, and this was a moderate up bar. That's possibly an important level to watch in the near term. When price gets above that, above the $2 cents, there's an increased chance price will push up and at least test this level here. But what happens at that level is going to be really important to watch for, to see whether the professional traders who likely came into the market over here and have left their footprints on the market that we can see, buy the offer, buy the offer, buy the offer, threatening down bar, threatening down bar. This is all professional traders. You can see, you see it all the time. Professional traders threatening the market. This is their footprints. So watch what happens up here if and when price gets back up there. There's a reasonably good reason it will. It looks like support has come into the market here. If price can get above this, if price can move up like this, it'll possibly retest that level and then make a bit of a push back up to this, what would it be, $2.35, $2.30 level, something like that. Then watch what happens. If price can exceed it, test the level and accelerate away, well, all well and good. If price just gets up to it, struggles to get above, has a second attempt perhaps, and then starts pushing lower, then I'd be a bit concerned that the professionals that had bought into the market previously had begun to exit here and finish the job here. So just watch what happens and you should be able to work it out. Okay, that's Star Farmer. If anyone would like to post it back over at Hot Copper, I used to post my analysis on the XLD thread, and then those who used to request it can have a look at it and see what they think. Thanks very much. See ya.